Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Well, it's a great day in Colorado, and welcome to the Colorado Real Estate Leaders Podcast. Today we have with us Yolanda Ruswayi, who is a senior loan officer with Oz Lending. Yolanda, welcome to the program.
Thank you.
Hey, so give us a little bit of your background and what got you into the lending business to begin with, because I have a undergraduate degree and a master's degree, and I don't remember anything with Mortgage Lending 101 as a major, so you probably didn't major in it in college, but what made you think, hey, let me get into mortgage lending?
Yeah. So actually, I went to Texas Tech and got my finance degree. And kind of towards like the end around COVID, whenever everything happened, I decided, let me see what I could do while everything's kind of like shut down and I'm like finishing up my classes. And so my fiance's sister, she's actually a junior banker, and she was telling me about being a loan officer. And I had absolutely no idea what it actually was until we discussed it a little more and further. And whenever I brought it up to my parents were like, yeah, whenever we came, to the States and we were trying to buy a house, we kind of just had someone, help us with the process, but they felt like they weren't really educated on the process that much. They didn't get a lot of information. They barely talked to their loan officer. And just with me kind of like studying for my test and stuff, I was like, whoa, that's actually pretty serious. I was like, no one went over closing disclosures or anything with you guys, like do's and don'ts of buying a house. And she was like, no. And so I kind of just did it on the side, and I ended up like really loving it. And I've just kind of been doing it ever since.
You got to find gaps in the market, right? Or gaps in the process or the experience. So your parents were like, well, we kind of were lost in the weeds. And you're going, well, if another borrower were to understand the process and really, take control of learning and being taught, then it might be a whole different experience. That's a
exactly
really great motivating factor. Yeah.
Yeah.
I think it's cool that your parents' story really inspired you to, take a different approach and teach people about their loans and everything, and not just look at it as a transaction. That's pretty cool.
Oh yeah, it was kind of like the American dream thing. And I remember when we came here, everything kind of changed. They had to like redo the whole process, get green cards, and just buying a home and moving out of an apartment and kind of having something of your own was like a really big factor for them. And watching them be able to do it and how big of a deal it is, it just really makes me want to make sure that other people like are able to, because it's a huge purchase. It's the biggest purchase of your entire life. So it might as well be easy. You be educated on it. It should be a smooth process.
That's a really cool story. Let's shift gears a little bit and let's talk about why a realtor would want you as your preferred lender.
Okay, so one thing that I have with my company is we have like an app. And so on the app, so a realtor can I can invite them to be on the app, and the realtor can go and kind of have me with them at all times. So if they run into a borrower that wants to get pre-approved, they just open up the app, send them a link. It connects to me and the realtor. They can put documents on that app by taking a picture of it. They can keep up with their loan. If it goes into processing, they'll know. If there's conditions, they'll know. Me and the realtor can message the borrower through the app. So that's something really cool that, I have to kind of make sure the communication and everybody's on the same base. And then I do free credit repair as well. So that's something that even if my realtors have a borrower and they're just not quite there yet, I can help them boost their credit by just telling them to do simple things through my simulator. And I do that completely for free. So those will always be potential clients for them.
Take a minute and talk to you about that simulator. What type of advice would you give somebody? What would you see there?
So when I take an application and I, run their credit, right under it has this Credit Plus simulator option that I can use. So I log into my system and it'll show me each of the scores, how much we can increase each of the scores by, how long it'll take, either immediately or a month or two, by them just doing simple things like getting stuff deleted off their collections, which I help them with write letters for, lowering a payment, people don't realize when you sometimes pay off a credit card completely to zero, it can actually hurt your credit.
Sure.
So I kind of let you know what's the sweet spot of lowering it down while saving you money.
Nice.
What's the methodology of hurting your credit if you pay it to zero as opposed to leaving $100 on it?
So, for example, if you have an account that's like more than 3 years and then you pay it off, it shows that you were able to borrow money, consistently make your payments on time, the minimum payments. And it shows that you can borrow money, pay back on time, and you can hold on to other people's money for a certain period of time without being late. But if you get an account and you just open it and then you automatically pay it off, credit bureaus don't really like that. It's not really a good way to build
paying it
credit.
off, or do you mean paying it off and closing it down?
Paying it off and closing it down too early isn't good.
Okay. I thought you meant I have a $10,000 high credit on my credit card. I owe $5,000 on it, but I'm going to pay it down to zero and leave it open. And that would not hurt your credit. It's the fact of closing it down because you want to have credit lines available to you, and you want to have the credit bureaus almost like the lender is looking at it going, wow, Yolanda could run $10,000 up on this thing, but she hasn't, and that's a good thing. It's the closing down that could potentially be a harm. Good. Okay, that's good clarification.
Yes. So that's something that I do offer my borrowers. And another thing that I do, it's called Fast Pass. So I have an in-house assistant, I have in-house processors and in-house underwriters. So whenever I take an application, I get the documents in and I start running all the numbers and calculations, and I send a pre-approval letter to my borrower and my realtor. After that process, I send it through the processing stage. So my processor, assistant, and underwriter gets a hold of the loan. So within 24 to 48 hours, we can actually let them know, that you're actually completely approved. So that when we do stuff like that, we run VOEs, verifications of employment. We do kind of like background checks. We do this to make sure that anything that would pop up during the process, whenever they get the contract, we kind of limit that early on. So by the time they find the property that they like, they've already been through FastPass. We've already done all the verifications in the background. We've already collected extra things that we probably were going to need, and they wouldn't have so later on, we don't have to spend a bunch of time going through the whole process. And all we have to focus on is them getting an appraisal, us ordering the title work, and them closing in 15 days or less.
15 days or less. That's pretty aggressive, isn't it?
Yeah.
Yes. Since we do all this, because whenever you order like a VOE from an employer, so you have to type it up, my processor has to send it. And sometimes that might take a couple of days for employers to reply. It's nice to do a fraud check and CAVers early on to make sure there's not student loan debt in the background that needs to be taken care of. So us just doing all those safeguards in the beginning prevents us from someone, executing a contract, putting down earnest money, going through the process. And then it's oh, we just found this in the background. Yeah. So we do all of that, and all those things take time. So that's how we do the 15 days or less closing, because we cut down all that extra time that the loan takes to go through processing. And then whenever they get the contract, we just order appraisal. We start talking to title, and we get all those things in order. And that way it gives us time for me to talk to the borrower about little things I notice on the loan as we, get it through FastPass, and kind of get them prepared. So we talk about the do's and the don'ts. And so they can be a lot more comfortable, and the realtor is more comfortable knowing that this loan is really solid.
Yeah. So that's like being pre-approved versus pre-qualified.
Yes.
Yeah, that's and I'm sure there's horror stories out there of people that are I'm good to go. And then you get on in there, and all that happened was you did a quick soft pull credit report and glanced at one pay stub, and it really wasn't, all that. And so what you're describing is an underwriter actually looking at all the income and going, ooh, wait a minute, there's overtime hours. Does that factor in? Oh, they're self-employed. Let's check. And when you have that pre-approval, that's pretty solid.
Yeah. So what's kind of a little different about it than the pre-approval is, so I verify the income, I, put it all into my systems and get all the accurate numbers in. That's how I give out my pre-approval letter. So I, had the training to check everything myself. And then when I send it to my processor and assistant, they start pulling all the stuff in the background, collecting a bunch of things as quickly as possible. And the next time the underwriter looks at it, it has all the hidden pieces.
Yep. So what kind of programs are you guys specializing in? I'm sure that the market changes and that means you shift from refi to purchase, purchase to refi, that kind of thing. But do you have any specific unique programs that you guys are known for?
Yeah. So obviously we do the home loans, refinance, custom properties, manufactured new construction, things like that. We have down payment assistance programs that help buyers get into the homes. And with me being able to help them with their credit, I can get those people worked up to where they need to be. We have a company that we work with called Orchard. And what Orchard does is they can help people who are not cash buyers become cash buyers. So they'll front the money up front for them, and then they can finance the home with us in the background. So this also allows them to be able to buy a house first and then sell their house later. And it saves them about $5,000 in closing costs because of the exclusive partnership that we have with Orchard.
And there's no fee for Orchard to front the cash?
So we, so specific loans, 1%. So they put 1% down, or the realtor can put 1% down of their commission if they need to, but they can have a whole pool of, like the website has a whole pool of like homes of people trying to sell their homes. And the clients that want to sell their homes too, they can put it on Orchard. So it saves the borrower money. They front a little bit of the money, and then the realtor can front less than 1% of the money down, and that can eventually go towards their closing costs for the borrower. And that's just because Orchard's working to help them sell their home because it's going to be on their live platform.
So then Orchard then would make like a real estate commission when the house sells, but that's from the other buyer, the next transaction.
Can you repeat that?
So how is Orchard making their money? Because it's got to be something good for them to then provide such a wonderful service to your borrowers.
Yes, because so that percentage that they used to, that you can put down, and that 1% that you can give them for being on their platform, after that, we have the partnership with them. So when we finance with them on our end, they get a piece of it through us. So we give them a percentage.
Neat. Well, it's always neat to have these special, like, hey, everyone else does it this way, but here's a unique nuance that we do, and that's really a competitive advantage in the marketplace. So that's really great to know.
Yeah.
Probably,
a lot of people are getting bought out for people coming with cash from California. I've heard it so many times. So that's why we decided to add it, because, we want people to have a fighting chance with cash buyers so they can become one.
Pretty neat. Using OPM, other people's money. Well, that's awesome. So what you probably in the market has shifted from refi to purchase, and depending on the rate environment, they go up, down, all around. So you're typically doing purchases, but you also mentioned that you do investment properties. So what kind of investment loans are you working with your borrowers for?
So I don't do commercial loans, but I do 2 to 4plexes for people. So when we do our investment properties, we only expect them to put 15% down if they're conventional. And then if they're FHA and they're going to be living in the property, they have to move in within 60 days, but we use the income from the other properties as income for the loan. So that potential income they're going to be making, we use it to help them qualify. So I've seen a lot of people that are trying to get into investments. So they'll get 1 unit, and then the other 3 units, we use the income from that. And that's their kind of way to get into investing.
Yeah.
And so I'll coach them through that.
They need to, so someone moves in within 60 days, how long do they need to live there before they can move out to the next maybe opportunity? Is FHA going to require them to stay 2 years, 3 years, or something like that?
They literally just have to stay there a year. That's so cool. After that, so what people do, there's also kind of like for some people that don't particularly want to live in it for that long, if they have to move, for example, because of a job, so they have to leave the property, that's kind of a way that they don't have to stay in the full year. They can just move out and say, hey, I have to be closer to work. I'm being transferred somewhere else. And that's kind of a way. There's like different ways to kind of get out of that. it just kind of like depends on everyone's individual situation. So
Yeah.
those are questions I would be able to go for individual files with borrowers.
But if you're, don't have a family and kids and you're tied down, that is a wonderful way to get into investment properties. You get a fourplex, you move into one of the units. You've got 3 units that are helping you qualify for the loan, but also those 3 units are cash flow. So, I mean, it
Yes.
probably is a nice, depending on the numbers, but it's probably a nice cash flow. And now you are owning a property as a landlord. You're living there. So, boy, if something happens 2 doors down, then you're right there. Then maybe you can do it again. Live there for 1 year, 2 years, and maybe pick up the next fourplex. That would be a neat strategy.
No, yeah. A lot of people have been doing that. There's been a huge boost of people that have been getting into investment properties for that particular reason.
That's really neat. So when you're working with your realtors and you're showing them some of these, programs that you have, if you line up your programs against someone else's, maybe that's going to have a couple little nuances that stand out. But some of the other things that you were talking about quickness and fast pass and the app, those are the kind of things that as a realtor, they want to look good to their buyers. So I would suspect that becomes a really big competitive advantage for you when you're working with realtors. Is that what you've seen out there is when your real estate lenders, that's one of the big, stars they put by that one is like, we like your responsiveness. We like how fast and how solid the approvals are.
Yes, that's one thing that my realtors have really appreciated. And I've had their other realtor friends refer to me because of it. Because one really important thing when it comes to loan is closing on time.
Mm-hmm.
So a lot of different things can happen within a loan. So getting ahead of the situation big time, and then also communicating with the realtor the whole time is really important. That's why we kind of all be on the same platform with the app, because worst thing that can happen is, a lender not communicating to the realtor what's going on, waiting to tell the borrower last minute what's going on when everything could have been handled before they executed the contract and put their money down. So that's also an important thing to make sure that people aren't losing their money and they kind of see the bigger picture of what they need to do to complete the loan very early on.
And I would probably add to that, close on time with no surprises.
Exactly.
Because I might have made the closing, but now the numbers were off or the customer is mad because. So, boy, when it's a smooth transaction there at the end and everyone's happy and there's no surprises, that is a high five and a job well done.
Exactly. And it's really important too for borrowers to kind of, be aware of what's going on. It's really hard whenever, someone just gets pre-qualification, pre-approval, and then they start going and shopping and they don't really communicate with their lender anymore. So I really like to keep that communication going. If they have a property they're interested in, I like to get the address, plug in all the numbers, calculate insurance, taxes, things like that, and kind of go over all those payments and what the down payment would look like for their home. That way through the entire process, they can be getting tips and learning more about the process, and me telling them like, hey, make sure not to do this. Don't finance anything. Don't have any large deposits over this amount, just making sure that the whole way through that they're aware of, don't change anything until this time.
Yes. Well, what are the main mistakes that you see that buyers make before they come to you and that you're focusing on to say, hey, just to give you a heads up, here's some of the mistakes people have made, but here's what to do to prevent them. What are some of those common things?
So one thing that I've had is, I talked to the wife, and then the husband, was working and didn't really hear the full conversation. And he decided that he wanted to go out and finance furniture for the home. So their debt to income changed. So we had to make some adjustments for that. But those are just little things where people, forget, and they're like, oh, well, I just need to, get this for the house upstairs in the media room. Those are things that cannot be done because those mess up your debt to income ratios. That could change up certain things in your file. I've had people, before they came to me and they were like, oh, yeah, I have cash. And I'm like, I don't see it on your bank statement. And they're like, oh, I have it, under my bed. I have it, in a safe in my closet. And I'm like, oh, well, we need to have it in your bank account, because people don't realize that we need to account for all those purchases. Because if you get a large deposit in your bank account and it's like $10,000, we need to know where it came from. For example, you could be like, oh, well, my family member gave it to me. Okay, well, we need to, how would we know that came from a family member? We need to, do a gift letter, but things like we want to know that you don't owe somebody money back. That you didn't just go out and get money from somebody and then on the back end you owe the money back, because that's going to mess with your ability to repay.
That's a good point. Because a lot of people think, oh, I'm pre-approved. You gave me the fast pass, thumbs up. And so now we're going to close in 15 days. So now I'm going to go out and buy that new car and furniture. And they don't realize that maybe possibly there could be another credit pull right at the end or whatnot.
Yes.
So really good points there. Well, Yolanda, thank you so much for coming on. What's the best way that someone can reach out, learn more about your programs, and connect with you?
So yes. So my number is 972-693-3775. I'm pretty open to my borrowers, so they can call me and text me anytime until like 9:30 at night. So I understand people have work, and then after work is sometimes the best time for them. So I'm open to texting. My email is yolanda.ruswayi@ozlending, OZLENDING. And I also have a website, ourpreferredlender.com, without the www.
Excellent. Well, thank you so much for coming on. It was a real pleasure talking with you today and learning how you serve your clients.
Thank you so much. I appreciate the time.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.coloradorealestateleaders.com.